Welcome to Barchart's educational webinars. Today's session, 5 questions to ask before investing in cryptocurrencies. The asset class of cryptocurrencies is certainly polarizing among investors and traders alike. Either you love them or you hate them. Investors who are active in cryptos will tell you that they are necessary from fiat currencies, or they're the beginning of a decentralizing disruptor technology. And investors who scoff at cryptos will tell you that it's part of a greater fool theory and is rife with Ponzi scams. And both traders would have valid points. The question or questions to ask is crypto right for me? And what are cryptos? How can I invest in the cryptocurrencies? Where are the opportunities in the cryptocurrency space? And what risks do I need to be aware of? Hello, everyone. My name is John Rowland, your host and Barchart Senior Market Strategist. And for years, I've been in the greater fools camp. So a good trader or investor can't be opinionated, and rather must recognize that market conditions and trends change, and cryptos have been trending towards a greater acceptance and adoption. So in this special webinar, I've asked a qualified cryptocurrency trader to answer my questions and uncloud my bias. What this session is not is a get-rich-quick pump and dump presentation, but instead a frank and professional dialogue between two seasoned traders, one with zero experience with cryptocurrencies, me, and one with years of practical knowledge. Now, before I bring on my special guest, this is usually the moment where I introduce my partner, Gene Baker, but Gene's on vacation this week. So I've asked my co-host from our premier membership show, Market on Close, Thomas Meyer, to step in. Now, Thomas also is an active crypto trader, and he's going to help me field your questions, and I believe he has several questions of his own. So please welcome Thomas. Hello, Thomas.
Hey, John. How's it going?
Good. It's a little different from our normal time together.
Yep, bringing in the B team this week, John, for the Wednesday webinar, because nobody can replace Gene.
That's for sure. That is for sure. But I think you'll do a good job. And I want to thank you for stepping in her place and helping me out. But also, I want to thank you for your collective knowledge that you're going to bring to our discussion today. Okay, buddy?
You got it. Looking forward to it.
All right. So just remember that for disclosure purposes, that today's session is for educational purposes only, and decisions to buy, sell, or hold securities or commodities or any other investments involve risks and best made on the advice of a qualified financial professional. And cryptocurrencies or digital assets aren't for everyone. They're highly speculative and they are a very risky asset class. And I would say that you could incur, major or substantial losses, including all of your principal. So I think for somebody who is thinking about cryptocurrencies, only if you have some risk capital. And under no circumstances shall we be liable for any loss or damages that you or anyone else incurs as a result of trading or trading activity that you or anyone else engages in based on any information or material that you receive through Barchart.com and our service. Okay, without further ado, my guest has been an active investor for over 25 years and a trading educator from everything from technical analysis to risk management. He has his own YouTube channel, Trader Merlin. And most importantly, he is my trusted friend. Please welcome Merlin Rothfeld.
Hello, hey, John.
Merlin.
Thanks for having me, man. I appreciate being here. It's always a pleasure working with you.
I always enjoy our time together, buddy. If it's on your show or just hanging out with you. So, I really appreciate you coming in because I know that you are an expert in this field. So just tell the folks here how long you have been in the crypto space.
My first Bitcoin I actually bought in 2014. A friend of mine mentioned it, and I bought it for like $250. And I said, you know what, I'll buy a Bitcoin. And then I really didn't fall into the rabbit hole until 2017. I did a trip to Thailand, and basically my entire trip to Thailand, I was just sitting by the pool, and I was reading as much as I could about Bitcoin. And I was a skeptic. I thought, this sounds weird, you know, this doesn't not backed by anything. And the deeper I read, the more I figured that there was really a need for this technology, whether it's Bitcoin or some of the other ones we're going to discuss today. So I fell into the rabbit hole and I've been enamored with a lot of the industry. Also, there's a large part of the industry I think is absolute scams. I mean, there's 26,000 different cryptocurrencies. I'd say maybe 300 have some legs and may be something someday. So got to be careful what you get into. But yeah, I've been in it since really 2017 is my active experience.
Okay, so let's just jump right into it. What are cryptocurrencies and what is the premise behind them?
I guess to understand what they are and why they rose to popularity, we have to understand our current system. So let me really quickly run through some visuals for the viewers out there. Most of the things that you're doing today in society, everything that you're doing as a consumer is done in a centralized manner, meaning there is central control. So if you're using Amazon, you're using eBay, you're using Charles Schwab, you name almost any business, Department of Motor Vehicles. I mean, it's all centralized, and that means that they have total control. More importantly, you have to trust that entity to do the right thing. And, you know, of course, they're businesses, so they're trying to, you know, increase their bottom line through sales. So hopefully they're trustworthy, but we've seen some examples where businesses aren't really trustworthy. Another thing about centralization is it discourages innovation. And it may seem kind of a strange statement, but when I say discourages innovation, when you have a business model where you've monopolized, you dominate an industry, there's really no need to innovate. There's more a need to prevent your competition from invading your space, not necessarily innovating. So centralization, in my opinion, kind of prevents exploration of new ideas and greater technologies, where you'll see decentralization here in a second does the opposite of that. Also, has a single point of failure. So as we saw with Experian and Equifax, and they were hacked several years ago, you can go after one set of databases. You can go after one location and shut them down, which creates a lot of problems, especially if, you know, in this day and age, we have hackers going after everything. So this old system, it's got some serious flaws to it. And lastly, this is something we're hearing, you know, from Elon Musk championship, this whole thing of censorship on Twitter, is the ability for any one of these government agencies or centralized entities to censor our comments, our content. If they don't like what we have to say, they'll kick you out or block you from accessing those networks. You know, even something like Amazon, if Amazon doesn't like what you do, or you maybe sell the wrong product, all of a sudden your account's blocked. And that's censorship, and that happens on centralized networks. Now, here's where the main change with cryptos happened. In 2009, when we had our financial crisis, well, financial crisis honestly was 2008, but in 2009, Bitcoin was created, right? The white paper was written in 2008, and it outlined a problem, and that problem was we couldn't access our money. We had Wachovia, you had Washington Mutual, both go into receivership, right? There was a run on those banks in 2008, and all of a sudden, banking said you can't access your money, which is crazy. I deposit my money and you're telling me I can't access it. So Bitcoin's purpose was to prevent that and say, listen, if you have money, it should be yours to do whatever you want with. So if you've got Bitcoin, no one can control that. You can send it to whoever you want as long as you can prove that you own it. Whereas with Wachovia in 2008, your assets were frozen, nothing you could do about it. So that brought up the discussion of decentralized marketplaces. So when we look at decentralized, we take away that power from the central entity and we give it to everybody else. I know this is really hard to grasp, saying, wait a minute, how can everybody have access to it? Well, not everyone has access to your personal information. Your personal information might be sitting at an address that people know where the address is. So let me walk through decentralization just so we understand why this is so critical to the roadmap of crypto. It has distributed control. So I'll use Bitcoin as an example for a lot of this today. With Bitcoin, nobody controls the network. There isn't one entity. It's tens of thousands of computers all over the world that keep a copy of the ledger. So where my Chase account, they have total control, the entire network has control. So a bit different of a model with regards to who has control of the information. It's also trustless. Meaning I don't need to trust any one person. In the example of Chase, I have to trust Chase. With the example of Bitcoin, I trust that the network collectively is working as a whole, and there's maybe one or two bad actors. It doesn't matter because the collective whole will identify those bad actors and say, get out of here. Now, if over half the network becomes bad, then you have a problem, but that's called a 51% attack. We can talk about that if your viewers want later. So as I run through here, fosters innovation. These projects are growing so quickly. There's 26,000 different crypto projects out there as we speak, and there are 639 exchanges, and there's more popping up every day. Every second, somebody has a bright idea and says, let me take this technology and build it and make it better. And then the same thing happens every single day. So innovation is happening at light speed with cryptocurrency and digital assets, which is part of the reason I am enamored with it, because it's just moving so quickly. I mean, it's jaw-dropping how fast it moves. Next piece is here, it's unstoppable. Now, in a case like Bitcoin, you might have heard somebody say, oh, they're going to shut down Bitcoin. They would literally have to shut down every computer that's hosting the Bitcoin software around the world. And you couldn't do it. You could say it's illegal in the US, you could say it's illegal in China. There's still some computer in Kinshasa, Zaire, or in Saudi Arabia that's going to have a little computer running the Bitcoin code. You cannot stop it. And finally, it's freedom. It's freedom for you and I to unbank ourselves, meaning remove yourselves from the traditional systems of control, and now you control everything. So that to me is the most exciting part of all of this, is looking at controlling everything myself and empowering myself and getting away from the old chains of the system. Now, part of it would be, where are the implications for this? I think when people think of Bitcoin, it's just money. Not true. When you look at this network, I'll start things off like streaming media, right? So we can decentralize streaming media. Instead of Amazon Web Services, I could be using other decentralized platforms, and we can address what some of those are here shortly. Industries like identity. Pretty soon, you won't need a driver's license or a passport. It'll be digital identity, all done on a blockchain. You have things like exchanges, right? You've got your Coinbase, you have your Kraken. Those are centralized exchanges. We can look at things like Sushi Swap or Pancake Swap. These are decentralized exchanges that don't have a controlling entity. Other industries like voting. I don't know about you guys, but for me, I am embarrassed as a country with our voting system. Regardless of which side of the aisle that you're on, it doesn't matter. I think the whole system is an absolute mess, and I don't trust it. If it was all done on a blockchain, it could be much faster, much more efficient, and much more transparent. Real estate. We're going to see tokenization of real world assets. Pretty soon, your home will be a token. And if you want to sell it to me, you can go to the blockchain, we can sell it, and that transaction could be done in a matter of minutes, as opposed to a 3 or 6 or 9 month process for traditional real estate. So I'm bringing these points up to show you that it's not just about money, it's about changing many facets of the way that we currently do business today. Things like custodial, where are you going to keep it? We'll run through kind of where to store crypto today, and most people are using banks to store their money. Well, in the 1920s was under your mattress. Well, there's other ways we can do it that are much safer than under your mattress. And finally, things like lending. You're going out there and using lending protocols to earn yield on your money. Instead of depositing your money in a bank, you can lend it out yourself and earn yield on it. So, for me, this really opens a door to empowerment to you as a consumer, not only as a choice of a monetary system, but also all of these different business interfaces that deal with money. And to me, that's why I get really excited about it. It's just, I think there's infinite possibilities, and the game is changing as we speak.
All right. So why should we invest in cryptocurrencies, or, why should we invest in the crypto space itself?
Good question. I think as any astute investor, you always have to have your pulse on the market and say, here's something that might be new opportunity. I think that this is much more than a new opportunity. I think that this is a game-changing opportunity, which in some sense will allow us to trade things that we normally trade in a whole different manner. For example, I know a lot of the Barchart members trade stocks, you trade options, you trade futures, you trade Forex. Now you can do all of those assets outside of a centralized exchange. So it's just opportunity. And what are those businesses that are hosting decentralized marketplaces, and how can I capitalize on their success in this market going forward? So I think part of it is, diversify your portfolio. You should always have a mix of different instruments to offset risk and hedge diversifiable risk. I think crypto definitely represents one of those. But I think there's a greater concept here. And let me come up with an example. When I look at history, let's say I go back to something like 1885. This was the preferred mode of transportation. If you had one of these, you were the king of the kings, right? You could get around incredibly quickly over vast miles of terrain in the old Wild West, right? I don't know where this one looks like, Wyoming or something, but this guy's got his horse, and to him, he's king of the world. 1 year later, literally 1 year later, Carl Benz made the patent for this bad boy, 1886. Now, I just imagine you're sitting in a saloon in the Wild West and you got your horse lasted up outside and this jalopy looking thing rolls by and you're like, come on, look how stupid that is, right? People were laughing at this car when it first came out. Some people were like, really cool, great. But think about it. In 1886, the infrastructure was not there for the car. It's bumpy dirt roads with rocks, and as soon as you got out of town, it was just wide open prairies. This thing ain't gonna make it very far, so people would laugh at it. Over time, though, what you had was the roads started to accommodate that vehicle. They got wider. They started to pave them. Oh, they can't go at night. They started putting up street lights. And all of a sudden, we get innovation and technology, which adapted to this innovation. And what we end up with is a system like today where you've got Tesla, reporting they can have driverless, fully 100% driverless cars potentially by the end of 2023, where you literally sit in it, pass out, go to sleep, and you wake up in Las Vegas and your car has driven you all the way there for 6 hours. To me, that is the crazy part of innovation.
All right, so I get this idea of evolution of a technology, and I'll give you kind of a background story. When I was in college, I remember I was doing an internship, and this is back in the mid '80s, and one of my bosses gave me, or it was part of my project, was they gave me a Mac, one of the original Macs, and I remember sitting down to it and thinking, oh, this thing is very intuitive and it's very easy to use. But I was thinking, this little teeny screen and this, this box is this really going to change the world? I didn't recognize that, right? And now what we look at, what Apple has done, right? It has definitely been one of those disruptors. So I get that. So what can we learn from this evolution of technology, and where are we in this evolution of technology as it relates to the crypto space?
That's a great question. My personal experience, so I really got started with high-speed direct access trading back in 1998. So back in 1998, I was averaging about 550 trades a day. I mean, I'm a high-speed trader, man. I would just buy, sell, sell, buy, sell, sell. And all I could think about was, making profits as a short-term trader. Unfortunately, my ignorance at the time prevented me from looking at what was going on with the web. I mean, this is late 90s, right? This is right as the web was just starting. This is 2 years after the irrational exuberance speech by Alan Greenspan. So if I was smart, I would have said, wow, this is a great technology that could change the future of how we communicate, of everything, but I didn't. And I should have bought 30, 40 different companies because I knew some were going to make it, some were going to fail. And if I held those through today, I'd have Amazon, I'd have Netflix, I'd have Google or Alphabet. I have all these big companies that are some of the biggest in the world. And unfortunately, I missed that opportunity because I was just too focused on the short-term stuff. I think right now we are in the third phase of that evolutionary process. And let me walk through what I mean by the evolutionary process. Some will say we're in Web 3.0. And what does that mean? Well, if we look at the information evolution, for example, Web 1.0, which goes back into the mid to late 90s, was connecting all the information. So now you could access libraries and books and stuff online. Great, that was fine. Web 2.0 started to connect all the people. And what I want you guys, let me just click backwards here real quick. What I want you guys to think about is in Web 1.0, where was the opportunity? Well, this was your Books A Million, which failed and disappeared. This was your Amazons, which has succeeded greatly. But then you take the next step, which is Web 2.0, connecting all the people. Look at the opportunities here that some of us now enjoy. Facebook, Instagram, LinkedIn, Twitch, Twitter, all of these social media interaction platforms, that's Web 2.0. And I'm pretty sure that the viewers right now would agree that, man, if you just bought into those early on, wow, what a difference your life would be today. Of course, 3 words mean nothing in trading. Should have, could have, and would have, so let's forget about that.
Exactly, yeah.
So Web 3.0, which is where we are now, is connecting all the money. I guess it's just all the monetary aspects. So we've got all the information, we've connected the people. Now let's connect digitally through the internet all aspects of money, whether that's physical currency, whether it's the way they're doing transactions, remittance payments, tokenizing real world assets, options, futures, forex. I mean, this to me is the biggest piece of this Web innovation table I put out here. This is the biggest one. And we might believe that it's not going to be that impactful because you and I have great financial systems, right? We are considered banked people. Well, more of the world is unbanked and doesn't have access to a monetary system. So now when you take something like Elon Musk's Starlink, which can connect everybody in the world through the internet, now people who've never had access to a banking system or internet or social media can all jump on board. So the global community now is going to grow dramatically with access to financial markets, insurance products, you name it. It really, to me, is a very exciting time.
Hey, Thomas, I think you had a kind of an idea on this as well. Did you want to jump in here for a second?
Yeah, I mean, I think, everybody has a different goal in mind when it comes to why they should invest in crypto. And one story that really comes to mind is 2014, around the same time that Merlin got introduced to crypto. I was on my way to the airport, and my Uber driver spent the entire 45-minute drive talking about why he's putting all his paychecks into Bitcoin.
Wow.
That was 2014. So he was obviously somebody who was really hoping to change his life. And I wish I would have stayed in touch with him because
he now owns Uber.
I wonder, yeah, he probably owns Uber. He's probably on a Caribbean island drinking pina coladas right now.
Yeah.
But then you have somebody like Ray Dalio. Ray Dalio is not the world's biggest believer in Bitcoin, but he recognizes there's a chance. And that's why he said that he thinks a 1% to 2% portfolio allocation is a reasonable amount to put into Bitcoin. So he just doesn't want to miss out on the potential. He recognizes that the potential is there. So just two different goals. Everybody has a different objective in mind.
Well, yeah, I think Merlin kind of mentioned this before. Is we're not talking about going all in on Bitcoin. We're talking about having a diverse portfolio. And if you think about as an investor, some of you might have I don't know, Barbie dolls as an investment, or art, or classic cars. This is just one piece of the puzzle of a wide diversified portfolio. And we're not talking about putting all our money into crypto. We're saying, hey, maybe there might be something that is worth a very small percentage of our portfolio, right, Nora?
Yeah, absolutely. And Thomas, it's a really good point. I think that anybody who's in the financial markets has to understand that you must be open-minded. The more you close yourself off to new ideas and innovation, you'll become old very quickly. And you look at your taxi driver, your Uber driver. I think what he did was probably incorrect. You don't go all in, especially when something is so new and you just don't know. But could he have taken some of his money and put it in there? Yes. And I would say that has to be risk capital. On the other side, you have haters. I wouldn't say Ray Dalio is a hater. He just doesn't understand it. And remember, Ray Dalio has made his money from a specific time in the market, right? So he goes, this is what works for me. For example, look at Warren Buffett. Warren Buffett, he was anti-Apple for the longest time, and all of a sudden he became one of Apple's biggest holders, right? He doesn't understand technology. So for him, he's missing the boat on a lot of amazing innovations because it's not what he understands. And I think for me, I look at this new technology as I approach it with caution and skepticism as well, but I start to research it. And if I don't understand something, I'm going to learn as much as I can about it so that I'm empowering myself to not be informed by other people's opinions, but let's do research. If I'm making a political decision, I'm looking at both sides of the aisle to see all the viewpoints, and I'll formulate my opinion. And I think that's what we need to be doing with crypto. And at the end of this presentation, if some of you go, no way, that's not for me, great. I appreciate that. But there's others going to say, hey, this is really good. I'm going to tell you to calm down and don't rush into it all in. Take baby steps and
right.
Invest in what's appropriate for you.
I mean, that's exactly why I've asked you on, because I've been, you and I have been, friends for over a decade now. And I know that when you first started talking about this, I was like, well, I was a very, very skeptic. And even into this moment, I'm still kind of skeptic, but I'm less apprehensive about the idea of putting some part of my portfolio into the crypto space. So if that was my plan, how do I get started, or how do I approach the crypto space?
Well, first and foremost is going to be educate yourself, right? Learn more about the industry, what it can do. And then I would say once you start to research a little bit, you'll find different market segments. And we'll talk about market segments here in a little bit. But you got to figure out how you're going to buy it, right? Where are you going to buy it or keep it? I think those are two very difficult choices. So let me talk about centralized marketplaces. So, John and I were talking about Coinbase earlier. You've got Coinbase, you've got Binance, you've got Kraken, you've got Gemini. These are the kind of the four horsemen of the centralized exchanges here in the US. I know some of the viewers right now are international. Well, you have more choices. And honestly, I think you have more risk. I think the regulatory side of the United States has clamped down a bit on what can be done with these exchanges. But the bottom line here is these become very easy on-ramps for you to buy cryptocurrency through your checking accounts. Coinbase and Gemini both have what's called ACH. It means automated clearinghouse, which is a system that you literally click a couple of buttons, you put in your checking account number, and now it'll automatically be able to move money back and forth from your checking account to the exchange, so you can now buy these cryptocurrencies. That's the easiest manner to buy crypto. The risk is that these entities all are centralized. And there's a common phrase that I want you all to remember and write down, especially if you get into this, is not your keys, not your crypto. So for example, we'll talk about paper wallets in a minute, but I have this little piece of paper right here. On the right-hand side is called a public key. That's my location of this Bitcoin on the blockchain. So I can tell people, deposit here. This is my address. Don't, by the way, don't do that. On the other side, this is the private key. This is what proves to the world that I own everything here. That's it. Simple as that. Coinbase, Kraken, Binance, Gemini, they all keep your private keys. So when you deposit your crypto at those exchanges, it's technically not yours. So what I do is I onboard, I buy from my checking accounts, I move money to the exchanges, I buy there, and I immediately move that away to something that's decentralized where I control the private keys. That's a really important piece. I've lost money through this process of keeping it on exchanges like Celsius, Voyager, BlockFi, all of which have gone bankrupt. Those are lending protocols. They kept your crypto, they've disappeared, and you maybe got something out of it. I think out of the $70,000 I had in Voyager, I got $8,000 out of bankruptcy. So you got to be careful. It was bad. It was really bad. And, you learn from it. Unfortunately, I hate talking about that type of stuff, but I think everybody should be aware that there is a lot of risk to this because it is so new and in development. So where should you keep it? Well, for me, once I buy something, whether it's Bitcoin, Ethereum, Litecoin, you name it, I'm going to do my best to get it to a decentralized marketplace where I keep the private keys. So for example, you have MetaMask. So MetaMask, if you want to use these DeFi marketplaces, is probably one of the best just because so many places use it. Trust Wallet's another one. You have Exodus, and then Ledger, which is it's a little device, looks like this. All right, so it's just a little USB drive. So I keep a bulk of my crypto on this, which is just a USB drive that keeps track of all my private and public keys. And yeah, I think this is one of the safer ways to do it. But as an investor, it's a little bit different than what you're used to, because when you buy shares of Apple, well, I keep it at E-Trade, I keep it at Charles Schwab, whatever, it's all the same. Yeah, because you have SIPC insurance. With crypto, you don't. So one of the things that I always emphasize with anybody who's taking or learning about crypto is you have to be your own security system. You have to be as strict as you could possibly be and understand at all times, at least this is the way I approach it, somebody is trying to take my crypto. So I'm trying to be as safe and protected as I can with regards to that. But yeah, I would say decentralized places to keep your crypto are probably the best place to keep it.
So when you say like you're putting it on that, all your cryptos on that little ledger, is that like what we would call a wallet or?
Yeah, so that's a wallet, and that's kind of keeping a location to store it, right? So yes, it's a wallet, and there's different kinds of wallet. There's hot wallets or cold wallets. A hot wallet is something that's connected to the internet. So on my phone here, I have different wallets set up. So if I want to go to a store and they accept Bitcoin or some crypto, I'm going to try to use that so I can help grow the ecosystem. But I keep a couple $100 on here, right? The bulk of
you're not putting all your stuff in a hot wallet. You're keeping it in separate. The only risk now is, like for me, is I'm a knucklehead. I lose my keys in my car. If you lose the keys to your cryptos, you're SOL, huh?
You are SOL. So it's funny you say that. So years ago, I was setting up, one of my coworkers asked, he says, hey, I want to buy some Litecoin. And I said, I have Litecoin. You just give me some money and I will put it on little paper wallets. It literally looked like something like this. And he wanted to give them out to his kids for the holidays. So we did 3 of them for $150 each. And for whatever reason, when I created the paper wallets, I went from one screen to the next and I sent $150 to this address, but I didn't get the private key. So literally there's money sitting at some address out there with $150 worth of Litecoin on it that will never be touched. It's literally gone forever because I didn't jot down that private key. And you're like, oh, you idiot, stupid. Yes, if you're the guy who loses your car keys, you got to think of a really safe way to store this stuff. It's risky because if I lose my private keys or my seed phrase, my crypto could be gone forever, and that is obviously something that we don't want.
Okay, so all right, so we understand there's exchanges. Now we understand a wallet, but let's get to the meat and the potatoes of this discussion. What are the forward-looking opportunities in the crypto space, and or better yet, what are the different types of cryptos? And in your opinion, can you discuss maybe the range of opportunities that are related to each one of these types of cryptos?
Absolutely. So, for me, I had to step back and think, why am I looking at allocating so much capital to this? And again, like you pointed out at the very beginning, this is not all my capital, right? I'm not Thomas's Uber driver here mortgaging my home for this. Don't do that, right? That's just crazy. I have everything I have in crypto. I look at and say, if I lose all of that, is that going to ruin my life? And the answer is no, right? And it should always be risk capital. So I ran through a couple of different assessment points for me. One of those being, why am I into this? I said, long-term growth prospects was the big deal. I'm looking out 5, 10, 15 years is really the target I have to start to see adoption and acceptance of this, right? Global adoption. I'm also looking at self-guided banking. As we get close to, the central bank digital currency, Fed now is going to be rolled out in a couple of weeks here, which is another scary thought. I want to go self-guided banking, meaning I'm holding all of my assets. I don't want it to be at Chase or Wells Fargo or Bank of America. To me, that's another big point for crypto. Again, disruptive technologies, which I'll address and give you some examples here. I love this. I think that the disruptive technology aspect of it is fantastic because so many parts of business today can be upended with new technologies. And then the last part that I was looking at it for was speculation. So I'm going to walk through a pie chart here, and this by means is not a recommendation of have these exact percentages. It's just to give you an idea that in this giant ecosystem of 26,000 different cryptocurrency and digital asset projects, don't just buy one. Don't be, I'm all in on this one. Don't do that. I think it's important to spread your risk around. Like any good financial advisor would say, diversification is key to helping you offset some of that risk. So what might we look at from a portfolio perspective? Well, I break it into kind of 5 different segments here. Number 1 is going to be the store of value. Now, what I'll do is let's go over here and we'll go to let's go to Barchart real quick, and I want to just kind of show you where you find all this stuff for those of you who are Barchart members. So you go to Barchart, and right at the top you see it says currencies. You click on the right hand side it says crypto groupings. There's a whole bunch of different groupings. I'll just click the popular coins part here. Now, especially for those of you who are new, this can be a great resource for you, not only to understand what are some of the major names out there like Aave, Cardano, Algorand, Cosmos, and we'll talk about some of those if you guys want. But you can also go in here. Here's your main view, which gives you the same basic information that you'd find from any quoted source, right? Your last, your open, high, low, close, OHLC, all that stuff. But they do have a couple tabs here, which I love, which is the technical side of things. So you can start to see from some technical indicators like relative strength or volume or moving average pieces. You can see different technical pieces, performance as well. So if you want to know what's really been moving, let's say you want to know which one's the best mover over the last 3 months. Well, you've got Zilliquat up 500%. Yeah, you probably wouldn't buy that one anyway. But Bitcoin Cash.
How many zeros is in that?
Yeah, it looks like it's got about 7 or 8. This is one of the scams that I think it's a scam that a lot of them, when they create these cryptos, they'll add a bunch of zeros. So you get all these Reddit Wall Street bets clowns that go, oh, it's really cheap. If it gets to a penny, I'm rich. It's not getting to a penny. Leave it alone. It's funny, John. I did this for a class I was teaching. I can create a cryptocurrency in 7 minutes. Like I should have done it for the class here today, for this presentation. Just created crypto so you guys can see how easy it is. Some of these are legit. A lot of them are jokes, but I like to filter through and just kind of see what's been moving. You want to see what's been great this year. Well, best performer out there is still Zilliquat, but Bitcoin should be creeping up that list, 81% this year. So, we start to find more information about trends, etc. I create watch lists for myself. So once you go from there, you can create a watch list. And let me go to my flip charts here. Before I dive into the individual segments, let me just say for many of you, if you're skeptical about crypto, period, and you don't want to deal with wallets and private keys and public keys, I think there's a lot of market segments that might be appealing to you within the publicly traded sector. For example, here's Coinbase, right? So you could buy Coinbase, which is the largest publicly traded U.S. exchange. COIN's the ticker symbol. That's another opportunity for you to not have to buy crypto directly, but to be in the industry by using the publicly traded stocks. Things like
the old guns and bullets theory, right?
Yep, exactly. Guns and bullets. Yeah, buy the picks and axes. If people are going to buy and sell crypto, fine. Let's get the exchange where they're buying and selling crypto on. Great, Now, to be fair, there is a lot of risk here, right? Because we know that Gensler and the SEC has been going after Coinbase and Binance. There's lawsuits on Binance or Coinbase right now. But the good news is Coinbase has a lot of money. They've got huge financial backing by significant players, including BlackRock, which we'll talk about more. And they've also been fighting back with the SEC. So, there's a lot of volatility potential here. You have things like Bito, which are a Bitcoin futures ETF. So you could buy, synthetically Bitcoin. You've got GBTC, which is they actually hold physical Bitcoin. This is a Bitcoin trust. You've got MicroStrategy, which now has 132,000 Bitcoin in their balance sheets. This is a technology firm, but really mirrors the price of Bitcoin. You've got miners like Riot Blockchain or Marathon. These are industry leaders in the picks and axes kind of aspect. So love it. Or picks and shovels, excuse me. When you talk about store of value, as I just mentioned, right, that was our first slice of the pie over here, is store of value. The first one that comes to my mind is going to be Bitcoin. Personally, that's my largest holding at the moment, but you got Bitcoin on that list. I would argue that something like Litecoin is also in that store of value, but you could also be using things like stable coins, right? So a stable coin is something that's pegged to another asset. So it could be pegged to the US dollar. Now there, I'm not looking for price appreciation. I'm just looking for stability. But there's also gold stable coin. So you can buy, a gold-backed stable coin. Some people look at gold as a store of value. There are many different market segments that we can slice up with that store of value piece. Next one is layer one platforms, and this might require a little bit of explanation. So when I talk about layer one platforms, what I mean is you have the base layer, and the base layer is called a layer one, and that means it's responsible for two fundamental pieces. It's responsible for recording all of the transactions that have happened. So where every Bitcoin has ever gone, that's recorded on the base layer. Then you have to maintain the security of that network. And that's, there's different mechanisms for that. We can maybe do that at another time because it could take forever. But base layer would be something like, I can bring them up. You could say, Bitcoin would be a base layer technology. You have Ethereum, which is one of the biggest smart contract platforms out there. Big fan of Ethereum. You have others like Solana. You have Binance has their own smart chain. You have EOS, right? A lot of these have some commonality, but a lot of technical differences. For example, Ethereum can only do about 15 transactions per second. Well, if you look at something like Solana, it can do 65,000 transactions per second. So very different in the structure and capabilities of these layer one platforms. And there's probably 50, maybe 100 different layer one platforms. I probably have a dozen in my portfolio. I have Polkadot, and I have Cosmos, Cardano. I don't know which one's gonna be the leader, and that's kind of why I spread it around. Let's say I've got a dozen of these layer ones. In 10 years, most likely 2 or 3 of those 10 will still be around, and I'm hoping that that will be in my portfolio, and therefore I will benefit from those big moves. All right, where are we at? Targeted projects. Oh, this is where I love this one. This is my favorite. Targeted projects. What I mean by this is an industry disruptor that's looking to revolutionize or change some aspect of the business. And the one that comes to mind, and there's many, but I'll give you just a simple example. If you want to stream, for example, we're streaming right now. If you want to stream, quite often you're using someone's technology, a centralized entity. So it might be Amazon Web Services, and they control all the information, and it's very expensive. Something like LivePeer costs 1/50th of the cost to stream, and it uses my computer resources, uses a decentralized computer. So how it works is I would download a software, install it on my computer, and let's say you want to stream your band's show tonight, you use LivePeer, and LivePeer will pick a whole bunch of different computers on the network and stream through that. Very interesting. You remove the censorship issue.
Let me stop you there for a second.
Please.
Okay. So make the connection for me, right? Because this is where I don't understand. You have this digital asset, right? What was the one you just mentioned? The LivePeer. Well, they're not a company. They don't sell software. How is that going to appreciate in value with the acceptance and adoption of this technology?
Good question. So with that, what you want to look for, especially as you're analyzing this project, is what is the utility of that coin or token. So for example, you have, I apologize for cursing, it's an industry term, they're called shit coins, right? And these are coins that serve no purpose. They're literally scams, things like Shiba Inu or Pepe. Absolute jokes. Pepe has been super popular. It does nothing. It serves no purpose. With LivePeer, The utility token of the LPT token, right? That's what it is. It's LPT is a symbol. The utility of that is you can now access their network. So they have the software, they install it on computers, and if you want to stream, you're going to have to pay to stream. It's not, you can't stream for free, right? It's 1/50th of the cost of Amazon Web Services, and that payment is done with LPT tokens. So now your LPT token starts to have value because it's what allows you to access the live peer network. A better example, John, would be Ethereum, right? Ethereum is the largest decentralized computer in the world, right? People don't understand it. That's what it is. It's literally a decentralized computer. If you want to do something with smart contracts or make a transaction, and I want to send money from myself to you with Ethereum, I want to send Ethereum from me to you, I have to pay with Ethereum. It's the cost of doing business on that network. It's my admission ticket to that network technology. That's the utility.
I mean, even if it's a very simple, if you think about it like a video game, like at a video game parlor, you got to buy the token to play the game, right?
Yep, that's it.
Oh, interesting. So you said level 1. I've heard level 2. What does that mean?
So the
level 2 solutions or something.
So what you have, if we look at something like Bitcoin, right? So Bitcoin can only do about 7 transactions per second. There's no way that it could compete directly face to face as it is with Visa, which does 2,400 transactions per second on average. That's just, so, you know, people say Bitcoin's going to replace Visa. No, not yet. It can't with its current structure. It just doesn't do as many transactions as Visa. The world would be bogged down if they use Bitcoin. So what they do is, instead of being able to do 7 transactions per second on the Bitcoin blockchain, you have a solution like the Lightning Network. And what the Lightning Network does is it batches transactions. So it might take, let's say, 1,000 transactions, put them into one, and then it shoots it down in one transaction to the Bitcoin blockchain. So what it does is it adds a layer of scalability. And you know, Bitcoin has a Lightning Network. Ethereum, which is one of the more popular networks out there, has been very bogged down, right? Most of the NFTs that are out there have been done on Ethereum. So when the NFT craze hit, Ethereum was so slow, it was ridiculous. All of a sudden, we saw Optimism. You saw Polygon or Matic. You saw Arbitrum. These are layer 2 solutions which sit on top and aggregate transactions and then report them down to the base layer. And what this does is it allows for extreme scalability. So we take the security of the layer 1 and the reporting mechanism of layer 1. So Ethereum will track all the transactions and make sure that that base layer is as safe as it could humanly be, or possibly be. I guess computers can make it even more safe. And then you add on that layer 2, which says, let's just batch a whole bunch of transactions using the safety and security and record keeping of the base layer.
So that's always been one of the criticisms of cryptocurrency, is that it doesn't have this scalable means of payability, right? So this is what this kind of level 2 is going to create for the crypto space.
You know, and it's a great question. And just to keep it in line with what we've presented so far today, you know, think of Bitcoin as that first car by Carl Benz in 1886. It's not doing 50 miles an hour. Like, the horse could probably run faster than that car at that point in time, right? It's like, come on, why am I going to use this thing? It's stupid. But eventually, they put a better motor in it. They put a bigger bed on it, and all of a sudden, it's dragging all this hay around. And everyone's going, wow, that is way more useful than the horse. And now it can carry more, and it's faster, and then it gets faster and faster. So we went from like Ethereum with 15 transactions per second, Cardano's got like 200 transactions per second, Polkadot's got 1,000, you have Solana with 65,000, you've got Sui and Aptos over 100,000 transactions per second. So we're getting the scalability on the base layers now, but that comes at a risk, right? The more transactions you have on the base layer, the layer 1, the more potential there is for problems with the data.
I know you have a couple more examples of segments of the Bitcoin, or excuse me, the crypto space. So once you show that, but I think you brought a great point up. Is, you know, I'm a trader and I'm always thinking about where is my risk. So that's what I want to talk about next. Is what are the risks that I need to be aware of in the crypto space? And I'm sure the couple of the ones you're going to mention here in this last piece of your pie are probably the more riskier crypto.
They can be. Yeah, let me real quick, I'll wrap this up and we'll talk about some of these risks, because that is a major piece to this. So oracles are something that I think are an irreplaceable piece of the entire ecosystem. An oracle is what allows a layer 1 blockchain, so that layer 1 platform, to go out and get external data from the outside world. Layer 1 blockchains don't go get information from outside, right? They rely on an oracle. So all of these business products, these decentralized exchanges, betting sites, anything that deals with data outside of the blockchain needs an oracle. So, you know, an oracle, let's go over here to Barchart real quick. I had a couple, there's one right here. This is called Chainlink, right? Chainlink right now is the leader in that industry, but there's Band Protocol, there's Rep, there's several others that are trying to take away some of that market share. You know, and competition's good. Let's get competition in that space to for oracles. I think that's an important part of the ecosystem. And then the last one is simply just the gamble portion. You know, and I think it's always fun to have a couple bucks sitting aside for the gamble aspect. And
the lottery ticket ones, huh?
The lottery ticket. You know, this whole thing with like Dogecoin. You know, come on, Dogecoin doesn't really do much. Elon Musk is having fun with it, but people keep saying that Dogecoin is going to get up to $1 or that Shiba Inu is going to get to $1. Here's a fun fact for all your viewers out there. People think that Shiba Inu is going to get to $1. It's at 0.000007 right now. Well, just so you know, Shiba Inu has 1 quadrillion tokens, meaning if it got to $1, it would have a market cap of $1 quadrillion. That would make it 500 times bigger than Apple. So if anybody ever tells you that Shiba Inu is going to $1 in the politest way possible, you can just look at them and go, "You are an idiot. You don't know what you're talking about."
All right.
Sorry for being condescending.
Let's talk about risk. So I think that's a great example of risk.
You know, there's certainly some major factors here. The number one is going to be government regulation, and we don't know what that heavy hand is going to be right now. Well, it's coming down pretty heavy, and all the speculation is this is just a political move. I'm not going to go into the politics side of things because we'll polarize the audience, and I definitely don't want to do that. But right now, the current administration is anti-crypto, and I think when we get to the election next year in 2024, there's a lot of parties that are making it one of their major platforms and saying, hey, we should have digital assets. We should embrace this type of technology. Let's not push it out of our country and lose jobs. Let's stay the leader. So this will be the biggest aspect to it over the next couple of years is going to be what does our government do to regulate it, to protect investors, and to make sure that we're as safe as possible. And they should be protecting investors because there's so many damn scams out there. Next on the list will be lack of education, right? Make sure you understand what you're buying. Don't buy anything because somebody says, you know, if I say, oh, I love this technology, don't buy it. Go research and make sure you understand it. Don't just buy.
Do your homework. Do your own diligence.
Do your due diligence. Do your homework. You have to because there's so many scams out there. And, you know, in the stock market, you always had pump and dumps, right? You get somebody pumping some company and then they walk away from it. You're left holding the bag. Same thing with crypto. So educate yourself and that'll help you become more aware of what the scams are. If you really get enamored with the industry, then I would say, you know, you start following different influencers or people who you respect in that industry and learn from them. My biggest problem, I would say, risks is obviously the government's number one, but I think most of it boils down to user error. I think most people just don't know what they're doing. They make a mistake like I did sending out Litecoin to a wallet that I didn't have the address for, you know, and you end up losing your money. You know, to me, I have to always make a balancing act here of what risks am I willing to take on, regardless of what I'm trading, versus the reward that's there. And in this particular situation, I think if you have a long-term view of it, I think that the reward potential outweighs the risks, but I'm still going to be cautious with what I buy and how much of it I buy. With that pie chart, you know, I have 40 different positions right now in crypto. If I'm skeptical on it, I buy very little, just a couple $100 worth. As I become more optimistic, or I see it improving itself, or it's getting adoption, I'll start to add more and more to those positions, and ultimately it'll become a bigger part of my portfolio.
So you talk about this evolution of decentralization and this, you know, this ecosystem of cryptocurrency. What I see is as a risk is that what you are doing is you're challenging the establishment. Those, I mean, especially when we talk about, you know, fiat currencies, when we start talking about, you know, Bitcoin versus, you know, let's say a digital currency that a central bank is going to create.
Mm-hmm.
So my question is for you, is there a way for me to invest in the crypto space where I'm still in maybe more of a centralized location, you know, not necessarily taking on the establishment, or is because I'm investing in the crypto space, I'm really taking on this aspect that I am challenging the establishment, and I am looking for that next innovation in technology. Does that make sense?
Yeah, I think it goes back to your comment earlier about, you know, buying the the guns and bullets. I think if you're still skeptical on it, then don't go for the specific projects, right? Go for the system as a whole, and that would be going to something like Coinbase, right? And buying shares of Coinbase, because they're the exchange where business will be done on if the business is allowed to go forward in the United States. I think that there's a lot of different ways you can get involved with it without actually taking physical crypto ownership, which has a whole new set of risk and user error to it. But I find a certain air of excitement to it. I really enjoy when I'm holding Bitcoin, or knowing that on this device right here, that there's nothing the government can do to take this away from me, right? They just can't.
Let's knock down your door and rushing into your house.
If they even came and took this from me and took it away, and then they, with a sledgehammer, smashed it, and then they burned it, and then they threw it in my garbage disposal for 15 minutes and turned it into pulp, I could still get my crypto off it because I have the private keys. Now the question is, where do you keep those private keys? I will not be disclosing to you where I keep all my private keys.
All right, listen, we're running low on time here, but I know you have a couple of takeaways, and then I thought maybe we could answer a couple of our viewer questions. You got time to do that as well?
I would love to. Yeah, I want to just kind of real quickly summarize, and I'm going to run through this quick because I know we're out of time. I would say my key takeaways for everybody here who may be interested or may not is understand that the world is constantly changing. Regardless of your age, you have seen major changes happen in the world, and I think we have to step back and look and see how are these changes going to impact the greater, growth of the globe. And to me, I see crypto offering great change for the future. There's going to be winners and losers out there. As a matter of fact, I think the vast majority of those 26,000 crypto projects that I mentioned, they will probably fail. So be selective in what you buy. Educate yourself, and I would say this for any asset class that you choose to trade. Educate yourself, have a plan, utilize tools out there that can help you. I think when you look at the services that Barchart offers, a lot of great resources for you, from watch lists and alerts and, using all the flip charts, et cetera, to keep track of all your holdings. I think that's a great resource as well. They'll keep you on the right page. And diversify, hold multiple positions and spread your risk around so you don't get hurt by one specific security. There you go.
All right, buddy. I appreciate that. Thomas, I know you see some questions coming in. I know what couple questions that came up?
Yeah, so Merlin, first question, the BlackRock Bitcoin spot ETF. It's been the big news over the last couple of weeks. It's probably caused the crypto market to pump a little bit. Every spot ETF application for Bitcoin has been rejected previously. The SEC cited price manipulation concerns.
Mm-hmm.
Do you think BlackRock is going to somehow manage to alleviate those concerns that the SEC had and get their application approved?
So two things. Number one, the SEC is under the gun right now. The entire world is looking at the SEC as being this bully that's going after all things crypto. Remember, they have said that Bitcoin is the only one that is not a security. It's a commodity. So it kind of cleared the way a little bit for the ETFs to thrive. Now, we do have a Bitcoin futures ETF, but I personally wouldn't touch those with a 10-foot pole. I don't trust that at all. 30 applicants, all been denied. Okay, fine. The track record looks pretty bleak. You also have Grayscale is suing the SEC for not allowing a spot Bitcoin ETF. So the pressure is mounting. And I've been saying for a couple of years now, we're going to get a spot ETF soon. BlackRock has a track record of 576 ETFs that they've applied for with the SEC. They have been denied one time. That's a 99.93% success rate. So I'm going to put my money, I'll say I got about a 99% chance that BlackRock will get it. I think more importantly, it's not just BlackRock, but I think that they'll try to save themselves from a little bit of scrutiny, because if they approve BlackRock and nobody else, it's like, come on, man, that's got to be some cronyism right there. Why would you deny everybody else but let BlackRock go through? Mind you, Fidelity just applied as well. So you could see Fidelity, maybe Grayscale and BlackRock all get their Bitcoin ETFs right around the same time so the SEC doesn't look as bad. But I think I'm almost guarantee it's going to happen here very soon. I hope it happens by August. I wrote an article for Barchart, which I would encourage you guys to check out. It says why Bitcoin could be at $45,000 by August. And a lot of it has to do with the BlackRock application, where they're going to get that Bitcoin from, because it's a closed market, and then ultimately what's going to drive that price up. So I think they're going to get it.
So your optimistic scale timeline is August, but what is your more realistic timeline? First quarter of next year?
No, I think by the end of the year. I think by the end of the year.
We'll have a spot ETF for Bitcoin.
Yep. And that's just an opinion. I know a lot of people don't believe that, and that's okay. that the markets work because someone's a buyer and someone's a seller. At this point, I'm optimistic. I'm sure other people out there are going to say it'll never happen, and that's okay too. You know, I'm not going to argue that. It's just my opinion.
All right, Merle, I see as a really good question here. So somebody was mentioned that, you know, they will never invest in crypto because they took a beating on the Luna collapse, and so they've basically given up on crypto, right? And I can understand that, right? You know, Burn, fool me once, shame on you. Fool me twice, shame on me. But what would you say to someone who sees, you know, these issues both on a centralized platforms, let's say Celsius, Block F, and then the DeFi's like Luna? You
Great
know,
question.
is there hope for these people?
Yeah, there is hope. And, you know, it's you know, let's take a step back away from crypto and say that you're in the dating world, and the first 3 girls or first partners you had were just like absolutely horrible people. Does that mean you give up on dating for the rest of your life? What you do is you learn from each of those, and you say, okay, what were the characteristics or things that I missed? What did I overlook? So, for example, with Celsius, Voyager, and BlockFi, these are all lending protocols. And what they did is they offered you rates of return on your crypto. So if I deposited Bitcoin, they'd say, hey, we'll give you 7% for your Bitcoin.
Right.
Yeah, right. That sounds great. But what we didn't understand at the time, and this is, I'm speaking for myself and probably for your person sending the question as well, is you didn't understand, neither did I, what they were actually doing with that Bitcoin. So what they were doing is they were paying me 7%. They were lending it out to somebody else that was paying them 10%, and then they were selling that, converting it to a stable coin on Luna and getting 20%. So it was this bit of a Ponzi scheme, which in hindsight, you're like, duh, I should have known. Remember,
Right.
if it sounds too good to be true, it probably is. With Terra Luna, you were getting a 20% rate of return for being in cash on their stable coin. Come on, how's that going to work, right? Where's that money coming from? So, you know, that burned me a little bit, but I said, okay, I'm no longer going to use lending protocols. So now my main source of income generation with the crypto that I hold is through staking, where I'm actually going directly to the protocol and I'm keeping it in the network and not using lending protocols where it gets lent out or anything like that. So, you know, I think
that's a good learning lesson is stay away from the lending protocols and stay with the stable protocols, right?
well, not necessarily stable, but just go to, so the lending businesses like Celsius, Voyager, and you know, you guys right now, there's still one in the US that's still functioning, and I pulled everything off of there. It's crypto.com, right? They're a lending protocol. It's like, well, I learned my lesson. I'm not using that at all. I'm going to go to other sites like,
Right.
for example, from my Nano Ledger, I stake directly. So I'm staking Polkadot, I'm staking Cosmos. Polkadot, I'm earning 14%. Cosmos, I'm earning, I think, 19%. And that's in the protocol. It's not like some.
You're still not worried about that having that high of a return from
No,
the
because
lesson you learned?
it's coded in. So what happens is that rate of return starts high to incentivize people to stake, and then over time it declines and gets back to a normal rate. So it's a teaser rate to get you in at the beginning, and over the next few years it'll diminish.
All right, we're at the top of the hour. Thomas, do you have any questions you want to ask Merlin before we let him go?
Merlin, there was one that came up. Somebody was wondering what you think about playing crypto miners stocks like Marathon directly through your brokerage account instead of dealing with the hassle of setting up a separate crypto trading account.
It's a great opportunity, but you have one extra set of risks that you have to encounter. So for those who might not know, miners like Riot, Blockchain, Marathon, they're typically mining what's called a proof of work technology. That's going to be Litecoin, Monero, Bitcoin is the big one where you make most of the money. There's going to be regulatory pressure there because obviously Bitcoin miners use a tremendous amount of energy. And let's say Riot, who's out of Texas. If Texas, for some reason, starts to really come down hard on the energy consumption by Riot Blockchain, that business is going to get hammered dramatically. But otherwise, yeah, I think Riot, Marathon, and there's several others are good options, but you really kind of have to study each one of those models, right? Are they holding their crypto? If they're not, then that might be a problem as well. But yes, I think looking at, and I had them both up here earlier, when you look at Riot and Marathon, their charts have done very well. Now here's Marathon. Let's go back over, let's say the last 2 years. It's been really dead. Oh, it was really dead. And then all of a sudden just started to surge right here. Let me scroll up just a hair. Back in 2022 in December, you know, it was down at $3. Now we're at 1150, peaked out around 14. And this is really because Bitcoin has been stable and started to move back to the upside. If Bitcoin has its rally like I think it's going to, then yeah, the reward for Riot, reward for Marathon is going to be substantial, and that share price will increase. So yes, long-winded answer to your question there, Thomas. I think it's probably a good play, but you got to be careful because they're very volatile.
All right, let me.
All right,
I'll ask
buddy.
one more question, then maybe
Okay,
we
go
can
ahead.
wrap it up, guys. Okay, so there's kind of three things on the horizon, Merlin, at least for me, that I'm kind of watching in the crypto space. We've got the Ripple legal case, which might be settled this year, maybe later in the summer.
Yep.
We've got the potential BlackRock ETF, and then we've got the Bitcoin halving in the spring of next year. If all of these things turn out to be good news for crypto, let's say it's a victory, what do you foresee for the next 12 months, let's say, in the crypto space? Are you predicting huge gains? Should bulls get really excited if all of that transpires?
Yeah, let me add one more to that, and that's the election, right? I think the election might be your most important piece, but the Ripple lawsuit, right? That's kept Ripple kind of depressed for a long time. And unfortunately, what it's allowed is other systems to come up in its place. If you look right now, the Fed Now program is trying to do the same thing that Ripple's doing. So I feel like the regulators purposely push Ripple down with this lawsuit so that Fed Now could strike their token. And I don't see a lot of great utility for Ripple going forward. That said, I do own a considerable amount of Ripple because I bought back in 2017. If that case is solved favorably, then I think that obviously is a huge win for crypto, and we'll start to see the whole industry start to move from there. You know, you had a whole bunch. First one was what? The Riot blockchain. The second one was what?
The BlackRock ETF.
Well, I think that's going to be the huge one because that's legitimacy. Now we have a spot ETF. What will probably happen is once we get some clarity from the regulators as far as what the SEC can do or their overstep, as I think that they're doing right now, we might get some other ones that are not securities and now become a commodity type ETF, and we get more spot ETFs out there. So this to me is the adoption phase where you're starting to see acceptance of this new technology. Bitcoin, from most people's perspectives, is okay now. It's a commodity. CFTC is managing all that. I think that that'll be a very big catalyst. So yes, I do think you'll see a pop because with the spot ETFs, remember, they have to buy physical Bitcoin, and that's going to drive it up because it's not like there's an infinite supply like US dollars. It's limited.
All right.
And then
the halving. Thomas asked about the halving.
So the halving is an interesting one, and I think some people may not know exactly what that halving is. So I'm going to real quickly just show you this graphic. I know we're tight on time. So Bitcoin is built off an emission curve where you have 21 million at the top there, and over time, the amount of Bitcoin that's created diminishes. So the first 4 years, there was 50 Bitcoin created every 10 minutes. And then you had 25 Bitcoin. And we are currently right here at about 19.4 million Bitcoin. I think we're slightly higher than that now, but 6.25 Bitcoin are created every 10 minutes. And on May 1st of next year, we get to that next red dot, and that it's called the halving, as you point out. The reward's going to drop to 3.125. So what it means is the supply creation, the amount of Bitcoin being created starts to diminish. So why this is so important for me is if supply starts to drop and demand is increasing, your basic economics, course is going to tell you prices
scarcity of supply and demand, right? I mean, it's
you got less supply and you have increasing demand.
More demand.
And what do you think is going to happen if we get this BlackRock ETF? Is demand for Bitcoin going to go up or down? It's obvious.
If you look at it, all of their ETFs that have been successful, what happens if $100 billion goes into the Bitcoin ecospace, right? I mean, that would be unbelievable.
If somebody wants exposure and says, hey, I'm going to buy this BlackRock Bitcoin ETF and I'm going to buy $100,000 worth of it, they've got to go buy 3.1 Bitcoin because they need $100,000 worth of Bitcoin to back up that deposit. That kind of demand is going to far outweigh any production increase of Bitcoin, which is just getting smaller and smaller and smaller. So yeah, I think it's going to be a big catalyst. I'm very optimistic, which is why I'm a long-term holder. That said, I did do a video for Barchart, which I'd encourage you guys to check out. In 2025, this is going to sound weird, I'm probably going to sell 100% of my crypto holdings. This is going to, I know it's a shocker, I'll leave it as a cliffhanger, but I'm selling 100%. I will wait until 2026 and I'll buy everything back in again. There's a 4-year cycle, and 2025 we hit the major 1-year down move. But watch the video; it's on the Barchart YouTube page.
All right, buddy. I appreciate
the future of Bitcoin. If anybody wants to check that out, the future of Bitcoin on our YouTube channel.
On our YouTube channel. Thank you, Thomas. Yeah. Listen, my friend, always a pleasure. I hope that folks appreciate your knowledge and all the information you gave us today. So I can't thank you enough. And, so if somebody wants to get in touch with you or has a question and think about it, is there a way they can get in touch with you or where we can find you on a day-to-day basis?
I'm not the most active on Twitter, but I'm Trader Merlin on just about everything. I do a Trader Merlin show every Monday through Friday at 2 p.m. Pacific time. You can email me at tradermerlin@gmail.com. And that's it. And I hope you guys learned something. Again, be careful out there. Take it slow. But, life is all about information and understanding. And the more that we know, the more informed decisions we can make. And hopefully that translates into opportunity for us. So thank you guys so much. And thank you for the opportunity, John.
I appreciate it, buddy. Stay safe out there. Good at vol trading. All right, my friend?
All right. You too. Thank you. Oh, wait, we got.
Yes, put my screen up there back there.
I'm going to get your screen up there. Hold on a second. There it is.
Thanks. All right, just wanted to remind you folks that next week we don't have a session. We're on vacation. But if you are interested in a Barchart membership, and I told you that Thomas and I do a premiere show on Fridays, Market on Close, there's a way that you can try out some of the things, like some of the tools that Merlin was showing on our page and off some of our screeners and stuff. There are 2 levels of membership. There's a Barchart Plus and Barchart Premium. You can there's a 30-day free trial process. So I would encourage you folks, if you enjoyed the video and you want to try out and see what it's all about Barchart. The other thing I'll tell you is that all of our videos are found on our webpage under the Learn section. You can find archive videos, or as Thomas mentioned, we do have a Barchart YouTube channel, and you can go in there. And this session will be on that YouTube channel. And Merlin slides, some of those things that he mentioned will be on there as well. Thomas, any follow-up you want to add before we say goodbye?
Yeah, no, just really great session. Thanks to you and Merlin for hosting it. I'm obviously a big believer in crypto, so my mind didn't need to be changed. But I think so much information was put out today. Hopefully, people's minds were open, which I think was the goal.
All right, buddy. Thanks for stepping in. And listen, folks, be safe out there. The good of health and the good of all trading.